Hello, today is January 23rd, 2021. We always start with our disclaimer, then go over our calls. This is my plan for Monday, the 25th. No guarantee I'm right, so trade at your own risk. Anything based on things other than the MEJT system isn't going to have the same level of accuracy. And my email is mejt.trades@gmail.com. Time to review our last call. Look for the pattern with the early high. This is it. Monday features the early low. Come back to this in just a moment. During the day, MEJT said ultimately higher price it would print. They did. It's a bit more than the minimum. Usually we get even more, which we did. MEJT said this rally was false. Gives us a target of 38.4165. That's just under this white line. We saw that print right at the end. So we also have support under the target, and we closed down at a support level. Support isn't obligated to hold, but at least you're at support. Note we also have a wall into the close. The wall concept doesn't always work on a Friday, but typically it means you've got panic selling by the amateurs, and if that is what it is, we'll gap up Monday and overtake these highs pretty quickly. Now, we have a number of positive things in this chart, even though we closed off by 11 handles. We gapped down, hit a lower low, and we closed over all these lows down here. So the initial push down didn't get any steam. Typically, it's a rally day with a final hour high. We got that, but typically the high is near the close, and it's negative that it isn't. So unless you recover this fast, it should lead to lower prices. The catch is this drop came so late in the day that it can't represent institutional action. So there is a very good chance it's a false move, and we're going to recover it early by gapping and overtaking this high here. Also, when this normally positive pattern fails, there's typically a straight line drop. You could argue this was it, but typically it's a much weaker day than this. So even though this is a negative pattern, if we don't gap and overtake this high, there are a number of reasons to believe, without 100% certainty, that there's a good chance we are going to recover. Longer term, the picture still isn't all that pretty. I've relabeled the gray count, but it's easy to see how we could be forming an ending diagonal triangle. And when these things happen, they can break a lower any time. And if that's the right interpretation, the target is to come back to the origin. That's in the 3200s. That's just another way to look at this. Well, here was a consolidation. Here's a false break lower, gap up over the consolidation. And this drop is just a 50% retracement of the move from the low to the high of the gap, and it's still at a low over the highs of the prior consolidation. So for now, at least, until we overlap it, this is a valid breakout over the high of the prior consolidation, and it isn't a reversal at this time. Well, we have mixed indicators. These are my calls for the daily patterns for next week. Monday's pattern has early low, doesn't mean you won't gap up. We have mixed indicators. It's negative, the normally bullish pattern closed with a drop rather than near its high. In addition, Friday's last move usually follows through into Monday's open. Only gapping and promptly overtaking Friday's high would invalidate the pattern, but there are a number of factors which suggests we're going to do exactly that. It's positive. We gapped down, hit a lower low, closed over both of those lows. When the bullish pattern fails, usually you drop in a straight line. You could interpret the opening drop that way, but typically one sees a much weaker close, much weaker action, a straight line drop pattern. I'm not convinced that's what it is. Now, if we gap down strongly Monday, that reestablishes the pattern. But anything less than that, that should be a Y in there, anything less than that would suggest at least that Monday's open was going to invalidate Friday's late drop by gapping up. And that late drop was too late to represent institutional selling in any event. Be aware sentiment indicators and lower targets are compatible with an impulsive move of several 100 points lower once we top. I would suggest the move starting more sharply down than we've seen so far, and accordingly we have a bit more upside ahead of us. I don't think it's a lot more, and I still like 39.20 cash. Doesn't mean other numbers aren't going to work. So we have mixed indicators in the pattern with the early low for Monday. I think it's more likely than not that we're going to gap and trade outside this range properly, and more likely than not that we're going to gap and trade over this high. And we should know before we open if that's going to play out. If it does play out, we have higher targets. And that's today's call.